the momentum in the green territory as of now. Nifty holding on to the gains of around 40%, especially in the last 15-20 minutes or so. We have seen a bit of a move coming in on this particular index. And talking about the bank Nifty, that's also holding a gains of around 40 points, but that's a broader market outperformance continues as of now. But with this, viewers, moving on. But before that, ET Now and ET Now Swadesh, in line with helping Indians rise with India, have partnered with Sundaram Mutual to launch Nivesh Day, a groundbreaking campaign to help the viewers build their personal finance portfolios through regular and disciplined investing. Nivesh Day is celebrated on 5th of every month. So join ET Now and ET Now Swadesh and Sundaram Mutual to learn how you can build your future with SIP in mutual funds. Moving on then in the show of Market Fatafat, let's get another technical expert for today, and we are being joined by Amar Singh, Head Advisory at Angel One. Hi Amar, very good afternoon to you. First of all, very happy new year, and let's talk about your first stock, that is Rajshri Sugar. How are the technical parameters shaping up for this particular stock, and which are the next levels?
Yeah, thank you for having me on the show, and wish you and the viewers a very happy new year. Talking about Rajshri Sugars, what we saw in the sugar stocks primarily across the board was that there was a sharp up move, and then the government announcement came, and again we witnessed some correction. Now again we are seeing a pullback rally in all these sugar stocks, and Rajshri also what we're seeing is that there is significant volumes which are happening today, and the stock is up by almost 20%. So once the stock starts sustaining above the 70 levels, then the stock has the potential to rally towards 77, 78.
All right, 77 and 78 is something that you should be watching out for. But moving on, then let's focus to all these auto counters that are in focus, because a kind of a mixed set of numbers we are getting in. Segment-wise, it is the tractor segment that has shown the worst performance in terms of the numbers, because the expectations this time were already on the weaker side. But the companies have disappointed on that front as well. Numbers coming in weaker than expectations. 40 to 45% decline is what the tractor companies from the likes of Escorts and M&M has performed. It's a decline of 40 to 45% on a sequential basis, and the companies are saying that the delay in the harvest as well as deficit in the monsoons are some of the factors aiding to this particular decline. Other than that, from the passenger vehicle segment, we have the numbers from M&M Automotive Division as well. A bit of a disappointment coming in on this front as well, because our expectation was 69,000 of units. The company reported 60,000 of units in terms of sale. Maruti numbers were actually in line to what we were expecting, but it's a decline of 15% on a sequential basis. From the two-wheeler segment, Bajaj Auto came out with a decent set of numbers, slight decline on a sequential basis and a slight miss versus our expectation. But from the Eicher Motors VECV, from the commercial vehicle segment, that has definitely outpaced our expectation. Numbers were way above what we were expecting. That's a jump of 55% on a month-on-month basis. So we'll definitely look out for other commercial vehicle players as well, from the likes of Ashok Leyland as well as from Tata Motors commercial vehicle division. So all eyes will be on that.
All right, moving on then. Shesha, Tata Consumers is the counter that you've picked out. It is currently trading with a cut of 0.2%. But tell us, why have you picked out the stock?
Well, yes, we have some management commentary that has come in with respect to market share gains. So ICICI Securities met with the management of Tata Consumer Products, and on the back of that, they've come out with this report where the management says that they see scope for margin expansion across segments. They say that there is potential to gain market share in tea segment with expansion and distribution expansion. They also see strong consumer acceptance for variants of their products, especially salt, like black salt and pink salt. They've also spoken about expanding their distribution network, where they say that direct distribution still has the scope to increase by as much as 20 to 25% from the current level of about 1.5 million outlets. Growth businesses may enjoy improving scale and profitability from here on, is what the management of Tata Consumer Products had to say. So on the back of this report that has come in, the stock is in focus today.
All right, then moving on, let's focus to what Gujarat State Fertilizer, that is GSFC, is doing, and definitely a brilliant move coming in on these fertilizers counters. Amar, and from the pack, GSFC is on your radar. Tell us more on this front.
Yeah, I would say that we've seen some very spectacular move in GSFC, and over the last 4 quarters, the stock has more than doubled. And currently, also, if you look at the different time frames on the monthly time frame or the weekly time frame, we see a lot of strong and positive and bullish momentum is there to stay. So what it effectively means is that any dip in the stock is to be used as a buying opportunity. The stock did offer an opportunity somewhere around the last week of December when it had made a low of 209, and again it's trading around 280. So the stock is up from those levels by almost 35-40% in the last five trading sessions. And this stock continues to be very strong technically on the charts. If I look at the long-term charts, the stock is trading at record highs with no sight in decline in momentum. So higher levels on the upside, the stock has the potential to rally towards the 295-300 levels. Now the 250, 260 should act as a very strong support zone for the stock.
All right, moving on to another counter that is in news today, and that's Dr. Reddy's Lab. Now, Dr. Reddy's Lab Inc. is a wholly owned step-down subsidiary of the company, and that has acquired, 10 lakh preferred A1 shares of Reddy Therapeutics Limited, a biotechnology company. Now, it is equivalent to 6.46% of the shareholding of Reddy at, a total valuation of 1.97 US dollars per preferred A1 share. And on the back of that news flow, Dr. Reddy's Lab is up with 0.6% gain coming in there on the counter.
Okay, moving on, and Amar, another stock from the fertilizers and chemical space, that is Thirumalai Chemicals. Tell us more on this particular one. What exactly are you spotting on the technical charts?
Yeah, I would say that Thirumalai Chemicals, the stock was in for consolidation because earlier it had made a high of almost 240 levels in September. And from there it had corrected towards 190 levels. Currently it's around 230. If I look at the long-term trend continues to remain, I would say, mixed. A short-term trend, we are seeing some strong momentum coming in the last few trading sessions. And also what we see is that there has been significant volume increase and delivery increase in the stock over the last few trading sessions. So that tells me that there is more upside to the stock because the stock has broken out of a zone of resistance. Earlier 200, 210 was acting as a zone of resistance. Now that has been taken out, so the stock is rallying towards the earlier peak which it had made around 244, 45 levels. So that's an immediate level for the stock. On the downside, the stock has made a good support coming around 215 to 20. So.
Right, moving on to the next counter, which is Emami. Ansh, you have picked out Emami for us. Now, Eli, there is a brokerage note that came out this morning on that counter. Do tell us what is the note saying?
Yes, so MK Global Financial Services has come up with a brokerage note on the stock, and as per the report, they have maintained a buy rating with a target price of 625, which is around 9 to 10% away from where the stock is trading currently. According to them, company's better focus is expected to help them in top-line delivery, although near-term performance may exhibit some seasonality. Also, promoter group strategic action, including buyback, are seen as favorable contributors to company's growth trajectory. Also, if we see the charts, the stock has touched 2-year high level today, and this volume has also seen a spike of over 2 times as compared to its 20-session average trading reasons. So for those reasons, the stock will be in focus today.
All right, thank you so much, Harsh, for highlighting this name. But moving on, and Amar, what's the take coming in on Engineers India? A lot of these PSU names are doing very well today. But what are the levels that you are spotting for Engineers India?
Yeah, I would say that the stock was actually in for consolidation. It had corrected from almost 160 levels to 120 levels. Again, it's trading right now at around 182. And what we are seeing is that in Engineers India, there's been significant, in certain periods of time, there have been significant enhancement of both daily volumes as well as delivery quantity. So that tells that there is a lot of smart money which has moved into the stock. If I look at the data, so that was on 10th of November when the stock was trading between 130, 140. So that was a time where we witnessed some significant buying interest. And again, it was on 14th of December. Again, for the last few days, we are seeing the stock breaking out of a zone of resistance, which was around 160, 165 levels. long-term trend continues to remain very strong. If I look at the long-term charts, so the next level of resistance for the stock is somewhere around 200, 205 zone. So the stock has a potential to rally towards that level. However, on the downside, the stock has now got a very strong support zone coming around the 155, 160s. So any correction should be used as a buying opportunity. 200, 205, that's a zone of resistance on the upside.
All right, so buy on dips is the strategy coming in for Engineers India. We're moving on. Let's shift focus to all these agrochemical counters in focus. Names like UPL, Dhanuka Agritech, Sumitomo Chemicals as well as Bayer Crop Sciences are in focus on the back of Anand Rathi initiation note, where they have gone ahead and initiated coverage on the agrochemical space, as well as all these 4 counters specifically where they have initiated the rating with a buy. I'll tell you about the target price, but what Anand Rathi is saying is that a lot of factors that are at play for the agrochemical industry, and now is the time when they believe that these companies and this sector could perform very well. They say that the rising domestic demand, shrinking arable land, sustainable opportunities to explore products going off patent in the next decade, stringent environmental norms in China offering domestic manufacturers an edge, as well as strategic tie-ups with the global giants. These are the factors that are at play, and this is why someone should look at this particular sector. Other than that, they're also saying that for Indian players, so the current slowdown is not as bad as we have seen in the last one, and there's improving farm economics, and there are a lot of opportunities that could power growth for these companies, as a lot of products go off patent in the next decade, and all these Indian companies will have a chance to make these products and sell not just in domestic market but internationally as well. From the 4 stocks, first up is UPL, where they have maintained the buy rating with a target price of 700 rupees. Dhanuka Agritech is another buy with a target of 1200 rupees. Sumitomo Chemicals, they have a buy with a target of 500, and for Bayer Crop Sciences, they are targeting 6,500 rupees, and that's why these counters are in focus. But definitely on the long term, they are quoting big on all these 4 names.
And well, moving on then to the next stock. Amma, you picked out SAMIL for us, Samvardhana Motherson International. Now, if you look at this counter, it has been trading in the range of 100 rupees, and it was just last week that it really broke out of that range. What are you penciling in for this particular counter?
Yeah, I would say that if I look at this stock, the stock had earlier made a high of 103. From there, it corrected all the way towards 85 levels, and it has taken out that level. So that zone of resistance of 100, 103, that has been taken out. And what we see is that there has been significant volumes also. So the follow through is there. And also the delivery quantity has been significant. Looking at the long-term charts, I would say the long-term trend for the stock is positive, though there is not very strong bullish momentum which we saw in some of the other stocks. But the intermediate term trend, the short-term trend, that continues to remain strong and positive. So on the upside, because now the stock doesn't have an immediate level of resistance nearby, so somewhere around 120, 125 is the zone of resistance for the stock. So any pullback can be used as a buying opportunity. The stop needs to be below the level, and upside, as I said, 120, 125 is the level to watch out for the stock.
Okay, 125 is the level that Amar is watching out for. But another stock related to the auto space could be Castrol India. And Ansh, tell us, okay, Amar, this is the counter that you have picked up yet again. And tell us, how is Castrol India looking on the charts? Is this a breakout candidate too?
Yeah, I would say that if I look at Castrol India, so Castrol India is very strong technically on the charts. So that tells me that this is one stock one can definitely look at, because the stock earlier was unable to breach the 160 level, because the stock tried to breach that level, but it was unable to be. Now it's trading around 190 level. So that has been taken out, and also the last few trading sessions beginning from 14th of December, we've seen significant increase in both volume and delivery quantity compared to the daily average for the last 50 trading sessions. So that tells me that there is more upside to the stock. And the stock at a point of time traded as high as 272 levels. And then the stock corrected all the way down. So there is more upside to the stock possible. Immediate level to watch out for is 210 to 15 zone on the upside. That's a level to watch out for. There the stock would meet with the resistance. Whereas on the downside, the stock has got strong support coming around the 160, 170 zone.
Right, moving on then, Ansh, you have picked out Techno Electric for us. This trade is up almost 1.5% in trade today. Tell us, what is the news flow that's powering this particular stock?
So the stock is in focus on the back of order win. So company has got new orders worth 1,750 crore. Checking the order breakup, transmission segment has got order worth 709 crore, out of which 199 crore is from Sterlite Power and nearly 510 crore is from Power Grid. Remaining 1041 crore is from distribution segment from REC PDCL. Also, if you see the charts, stock is already trading near the record high level. In addition to that, 2 sessions back only it has come out from a consolidation of 14 to 15 sessions. So for those reasons, the stock is in focus today.
All right, let's shift focus to what these OMC counters are doing. They are, the last time I checked, they were all holding themselves in the green. But Ashesha, tell us why all these counters are in focus today.
Well, yes, Morgan Stanley in fact has come out with a note on the oil marketing companies where they say that they are preferring HPCL over BPCL and IOCL. They've also given their reason for this. They say India's auto fuel prices are benchmarked at nearly $90 per barrel, and fewer retailer integrated margins currently are at about 2.2 times above their mid-cycle averages. Meanwhile, they also say that this makes a strong case for investment in oil marketing companies, higher refining margins, higher upgrades, balance sheet debt deleveraging that the companies have been focusing on, integration into petrochemicals and improved free cash flows is what makes them bullish on these counters. So they are preferring HPCL over the other two, BPCL and IOCL. And on the back of this report that has come in from Morgan Stanley, we have both these counters in focus today. BPCL holding up with gains of 0.7%, HPCL flat as we speak.
All right, moving on. Amar, you've picked out LIC Housing for us. Now, LIC Housing, tell us, what are you penciling in on the charts for this particular counter? In fact, this counter today is up more than 5.5% in trade.
Yeah, I would say that looking at LIC Housing, it was long due because this is one stock post its listing, we witnessed a significant correction and then it came down all the way towards 550 levels and currently is trading around 860 odd. And what we see in the charts is that the intermediate term trend is extremely strong. So any pullback is to be used as a buying opportunity. The long-term trend has also turned strong and positive for the stock. And the interesting part is that since the rally began, that is on 24th of November, there was significant volumes and delivery quantity that was, I would say, maybe more than 100-day average, that's sort of higher than that, multiple times of that. So that was the start of the rally. That was around 600, 640, 650 levels, and the stock has rallied significantly. But still, if I look at the stock is still away from its all-time high of 918, 919. So that's a level that one should look out for, and the stock has the potential to rally towards those levels.
All right, and moving on to the next counter for the day, it is Bodal Chemicals. Bodal Chemicals, this trade is up, already 1.5% in trade today, given up a little bit of those gains, and it's up right now 1.2%. But the news flow that's coming on this counter is the fact that they have set up a new project of specialty benzene downstream projects having a capacity of 63,000 MTPA in Gujarat. Now, the company has already commenced the commercial production at its new manufacturing unit in village Saika near Dahej, Gujarat, and this has started from 29th of December. On the back of news flow, this counter is up 1.2%.
Okay, moving on then, and let's shift focus to what these consumer durable counters are doing. And Shesha, tell us why these counters are buzzing in trade today.
Well, yes, Nirmal Bang in fact has come out with a very interesting report on two counters within this space, Blue Star and Voltas. For Blue Star, they are maintaining their buy stance. They've hiked their target price from 1,015 to 1,100 rupees per share. And for Voltas, they are maintaining a cumulative stance on the stock. They've hiked their target price from 880 to 985. They say Blue Star is a better bet in the short to medium term as compared to Voltas. They like Blue Star's strategy to export CAC, that is commercial central air conditioners, both under its own brand as well as an OEM. They say they are maintaining wait and watch stance as far as Voltas is concerned, and any price correction to about 850 to 875 levels will be a good buying opportunity, and it will offer a favorable risk-reward ratio. So for now, they've hiked target price on both of these counters, and on the back of this report that is coming from Nirmal Bang Securities, we have these counters in focus today.
Alright, moving on to the next counter, Silo World, that also is, the stock is in focus on the back of news flow based on a brokerage note that has come out. Anj, do tell us what the brokerage note says on that counter.
Yes, so ICICI Securities has initiated a coverage on the stock with a buy recommendation and a target price of around 920 rupees. And currently the stock is trading around 790 rupees, so we have more 15 to 16% on upside. So ICICI Securities is optimistic about Cello World's unique position in the market and sees strong competitive advantages. They also highlighted the company's strategic moves such as expanding distribution networks and launching differentiated products. They also expect margin tailwinds in the near term, especially with a correction in crude oil prices.
Alright, Ansh, thank you so much for highlighting. But moving on, and let's focus to an exclusive story wherein Tata Group owned Air India's low-cost arm, Air India Express, is getting ready now for another phase of growth. Now, the new airplanes from Boeing are being added to the fleet, and the airline plans to expand their operations in the Tier 1 and Tier 2 cities in India, in addition to some international destinations. ET Now Sumit Chaturvedi flew with Air India Express CEO on one of their newest airplanes and discussed about the airfares and the plan ahead in 2024.